Good evening, everybody. Yeah, I guess they've changed things around and I'm Novia. Let's see. All right. I don't try to think if there's anything I'm supposed to announce tonight, and I can't think of anything, so we'll just get started. So doing our analysis of which way the market is going, bullish Harami, stochastics towards the oversold area, bullish Harami at the same level. It did a bullish engulfing signal before, and we can pretty much draw the trend. Oh, Shaw. The trend channel right down through the bottoms and the tops. So it'll be important to see how they open this market tomorrow. And then it will be important to see if they break this level. So if they open it higher, we know they've probably supported here with a bullish candle, or bullish reversal signal, the bullish Harami, which also means we want to watch to see what happens when it gets back up here at the 50 and the T-line area. Is it next target, if it gets through there, is obviously back up to the top of the trend channel. So what's that mean for our overall market direction? It means short term, there's probably going to be some positive days, but not anything yet real convincing as far as a trend if they can't get out through this trend channel. See, the NASDAQ, somewhat the same scenario. You can draw that trend channel pretty much right through these levels. So if we see a positive open, expect a couple of days of coming back up to test this area. If we see a lower open, breaking this range right here, means obviously our downtrend is still in progress. The big hoopla, obviously, is crude oil prices, which got down as low as 35, rather. Anyways, they were showing, maybe it was still December crude. I don't know when that contract expires, but that was trading at below $36 a barrel today. So that was the big concern. Now that's a perfect example of why you don't assume what was true before as far as investor sentiment will be true today. Obviously, at some point in the past, if crude oil had dropped to $35 a barrel, the market would just be skyrocketing because everybody would say, oh, our transportation costs are down, everybody can buy gasoline at the pumps, blah, blah, blah. Lots more money out there in the economy, and that would send the market skyrocketing. Today, with crude oil trading at $35 a barrel, everybody's saying, no, does this mean there's something wrong with the economy? There's something out there where they're not using up crude as fast as they used to. So, again, this is why, and this kind of leads back to, should we be in a Santa Claus rally? Or anytime it looked positive, that was a Santa Claus rally. A spot was down to 34.53. All right. So the indexes of reversals and September reversals occurred at the 100-day moving average. All right. Again, you can throw anything you want to on the charts, which will add to the credibility of where the signals are occurring. And the benefit of that is, since we know the signals are what have worked most consistently for the last 400 years, if something doesn't seem to be working, Um, you take it back off your charts. So anyways, right now, sideways market, crude oil still, I'll try, this is the January crude. Hasn't reversed yet, still heading down. Yeah, February's G, March's H. In gold prices, this is the March contract. Well. Oh, that's because I'm not supposed to be in the March contract. GCAG. In the February contract, you can see after the kicker signal, they tried to pop it back up. So here is a good example of if you see a bullish signal confirmed and then unconfirmed, close it back out. We're going to get into a little bit more of this as we go along tonight. But the fact that they could close it back below the T-line, number one. Number two, close it more back below the halfway point of the candle that was confirming that the bulls were taking control. I told you the bears are back in control. You want to be back out of this. So that's where your next analysis comes in. What is this doing? It's possibly doing a wave one, wave two, bearish J-hook pattern going into wave three. The dollar, again, the March contract, dollar's still kind of drifting, which means the euro still kind of just drifting slowly to the upside. And coffee, we were watching coffee today to see whether it was time to short. Now, anytime anybody looks at a chart, they should be analyzing what is the overall chart telling us. First of all, we had a big evening star signal, stochastics rolling over. That told us we were probably heading down, but to where? So this is another case where you kind of see that there's a trend channel going up through this area. So didn't do anything because I wanted to see it close more down here, telling you this trend channel is out of the picture. Whenever, again, this comes back to convergence analysis, which is we want to put as many indicators into the evaluation to see what the ramifications are going to be based upon conflicting indicators. In this case, we've got an upward trend channel. We've got bearish evening star signal. Stochastics heading down. But there's conflicting. It's an uptrending channel. Oh, let's see. What do they use the UWTI? Or I think you could even use oil. I know USO is another one. Okay, let me get let's see. All right, so coffee. This is why we want to make sure that the analysis is complete, or as many factors that we can address that would tell us that a reversal has turned this trend down versus the uptrend channel being in progress. Because obviously if it had closed down here, then we'd start shorting it. And GLEG, live cattle. We can see what's happening. Every time it came back up to a resistance level, sold off. Evening star signal here at the T-line. This one's a good one to short still on weakness tomorrow. That tells us this downtrend, I don't know how far back this should go. That's kind of giving us the picture of what's going on. So there's potentially your next target is down here. And why do we say potentially down there versus bottoming? because we're seeing a sell signal again. Now, even though it's not in the overbought condition, it's telling us they failed with an evening star signal at the T-line. We're probably still heading down because the whole channel or the whole trend has been heading down every time it's come up and hit a resistance level. Let's see. I was also trading short cotton today because of potentially a bearish doji sandwich, which it did somewhat. Still watching to see if they bring it down here to the 50 to see whether the 50 is going to continue to hold or whether they break this level and told us the 200 was acting as a resistance level, kind of a double top. They could be taking it down much further. Okay, tonight I want to kind of go a little bit deeper into trying to get rid of your emotional elements when putting on a position based upon a good candlestick pattern and knowing when to get out when it's not working. Let me, so I'm going to kind of intertwine this. We've had a good good move here on TERP ever since the gap up, ever since the piercing signal re-gap up. We can pretty much see where our likely target could be back up here. First target is up here at the 50. But the reason this is still a good chart is there was a time when we got in and then a time to get back out. Because why would we get out here? Number one, because it closed below the T line. Number two, it was closing more than halfway down the candle that told us the bulls were in control. So we had a strong signal. That was our best friend signal. But that told us we wanted to be back out. Then what happened a few days later? A piercing signal. And what was our stochastics telling us? It was telling us they were still coming up out of the oversold area, that we could be buying on positive trading the next day, because what would this whole chart be telling us? Best friend, strong best friend, kind of our stutter step, meaning they sold it back off, and then another buy signal, and another strong confirmation, a gap up after a piercing signal. Very simple on this one. We're just staying long. Where's the next likely target? Up here at the 50. And what's the next likely target? Up here to our big scoop type handle. So at least we know what the targets are, but we also know there's times to get in and there's times to get back out and there's times to get back in again. And I'm going to kind of readdress that as we go along because I don't know which orders. These are the type of charts that you want to get yourself into. And so there are times when you get into a chart and you get out and you get back in. And you stay in until you see a sell signal. Now, the reason I'm pointing this type of chart out is because we own some of OPHT, as long as it doesn't close back below the T line. And it's all based on when you're finding good, strong chart patterns, we at least know what to do with those chart patterns. Here's kind of our bobble on AVXL, that if it opened positive today, we would expect at least it to come back up to the 50. In this case, they gapped it practically right to the 50. So what do we do with this now? Definitely would be buying this one more on positive trading tomorrow, because what's it telling us about the resistance level? Told us we had a bullish engulfing signal off the T line up to the resistance level, and if they open up positive after a doji type day, what do we know about that? You know that it's going to move in the direction how they open it. So if they open up positive, it's telling us they're moving up positive after a doji, number one. And number two, if they're moving up positive, they're pretty much telling us this isn't a factor anymore as far as the resistance level. So anytime we can pick out good chart patterns, like our recommendation on SEDG today was based on that if it opened positive and came up through the 50, we essentially were confirming our JHOOK pattern. In this case, they gapped it up through the 50. and continue to take it higher. So this is why when we keep doing our training sessions, we did one a few days ago, and we're going to redo it for the non-members here in a few days, that if we know that our J-hook pattern is going to produce a wave 1, wave 2, wave 3, and we know what should affect or kick off that wave 3, we know where to kind of project our target. That if this was from 15 to 20, from right here, we should be heading toward the $25 area, which would also coincide with this last little peak. So is that where it's going to go? Have no idea. But at least we know that if it does climb up there over the next couple of weeks, which would be the expectation coming out of this J-hook pattern, that this is the area that we start watching for sell signals, because that's what human nature does. They work in patterns. And the reason we can calculate that this move and this move are the same is because that's the way human nature has created these patterns for hundreds of years. So this is where we have at least a target to start watching to take profits. We did that one. So these are the type of situations we're trying to get ourselves into. Last week there was a big discussion on the bobble, where once it hit the 50, it pulled back. And notice how it pulled back with indecisive days. And what was the T-line telling us? They weren't closing below the T-line, so we're getting ready for a bobble, which means if they came back up through the resistance level, we wanted to be buying because the bobble was in place, and if they broke out, now the bobble creates that bullish J-hook pattern, which also told us that if this was wave 1, wave 3 should be about the same magnitude, or basically coming up to the 200-day moving average, which also coincides with the peak over here. So you have a rule of thumb on buying when the stock opens higher. Do you buy at level higher than the previous day, wait to pull back halfway? No. The rule of thumb to me is, what was it? That if this was opening as expected after a candlestick reversal signal or a bullish signal, like we saw in this one, a bullish engulfing signal right off the T-line. Even though it wasn't in the oversold area, it was kind of the stochastics were kind of consolidating. That told us a positive open would probably take us to the 50. Well, it wasn't worrisome to be buying even up here because it was telling us the 50 wasn't acting as resistance. Now, they sold it off and closed right here at or just slightly above the 50-day moving average. But we know what we should be doing here. If it opens lower, that's telling us they're failing to get up through the 50 after a shooting star doji type day, even though stochastics aren't in the overbought area. If it opens lower, what's our likelihood? They're going to come back and test the T-line. If it opens positive, that's going past the question here. So if I'm looking for something to happen, for example, if I was looking to buy this one today on a positive open, what was that telling me? That my pattern was still working. Now, are there cases where it opens positive and closes down here? Definitely. But the probabilities are greatly in your favor, probably about 3, 4, 5 times to 1, that pattern is still working. Mr. Scotty, the gap fill area and the downtrending channel where resistance, how do you ignore that or stay in the trade? Is this the gap you were referring to? Well, where do the most people usually sell? They're usually panic selling at the bottom. This case is close to the bottom. Now they came up and they filled the gap, but how are they filling the gap? Just because they filled the gap doesn't necessarily mean this has turned out to be a bad trade. This turned out, if you were trading off of these signals, which was a piercing signal, and then eventually coming up through the T-line, where was your next target? To the 50-day moving average. If you were taking profits right here because of what you were looking for, that they had filled the gap, that doesn't necessarily mean that's the end of this trade. All that meant was they've hit one target. Now we have the visual ability to see what's our next pattern that's setting up. Is it going, what's it going to do after it filled the gap? A lot of times, well, I say a lot of times, just because they came up and hit a target, that doesn't mean that trend was over. We're just watching to see what it does once it hits those resistance levels. So in this case, once it filled the gap and it was at the 50, we could read how devastating, not devastating, how convincing the selling was. Doji, doji, doji. Rawhide. I didn't know I can write songs like that. Oh, man. But we could see that there wasn't any real decisive selling at that point. So we were looking for our next pattern, which in this case was the bobble. Let's see. So no, this didn't concern me. I'm trading this right here. Now these are all factors. Make these chart. Now this is all factors, but in this case, pretty much do the trend channel more along this lines. It's kind of your trend channel. So now they were breaking out through the upward part of this trend channel. So this was the question, or this should have been the question. If you're worried about the downtrending channel, which you should, but it got up here and started doing a pattern that we recognize, which would be the bobble, breakout, J-hook. If we know what the J-hook is, are supposed to be doing, then we know that this move and this move is decisively going to take us out through the top of that channel. So that's our concern, but this is our analysis. Everybody else's concern may have been, all right, you're in a downtrend, you may be hitting resistance levels, filling the gap, but we can see that there's still more energy in that trade. Let's see. I hope that, is that three white soldiers on this pattern? Yes. And again, the three white soldiers are not three up days. They're up, they open lower the next day, take it back up, open lower the next day, take it back up. That's a much more solid reversal in the sense that they're not skyrocketing it, taking it up, there's some profit taking. Taking it right back up, there's some profit taking. But the final decision is that that they're still buying this in the full pattern. Where do you try to buy on a 2, 3, or 4 breakout? Where do you try to buy on a 2, 3, or 4 breakout? Grandpa, I don't know what a 2, 3, or 4. Where do you try to buy? Wave? Oh, I only count to wave 3. If this is wave 1, this is wave 2, this now becomes wave 3. If it comes up here and pulls back, now this becomes my wave 1, wave 2, wave 3. I'm not doing Elliott wave, which is counting wave 1, 2, 3, 4, 5, ABC reversal. No, because I'm not in a trade that long. I just want to know what's happening on this trade right here until I see the next sell signal. Then I know I'm out of it, but I want this trade. So where do I buy when the buy signals tell me it's time to be buying? So as we can see right here, we had a doji bullish confirmation, and then the next day they close above the T line. What's that telling us? We can already see that the J-hook bobble is in progress. You measure up or down resistance in dollars, or use in, oh, Jim, probably in neither. I I just look, I use dollar. Doesn't matter what the percentage is. I'm looking at the bottom to the top of wave one, and somewhere right in here, starting wave three, this magnitude and this magnitude is the same. Where can I find your scans and indicators for use on TOS? Oh, does somebody have that link for Justin? I know they're there. I just don't know how to get there because I will go there. Okay, so this is why I'm going to kind of regress here, even though I've already regressed in my regression. This is why I usually have 8 or 10 positions on at any one time. Because I'm looking for a setup like this. And once it gets going, it should have a pretty good move. But just because a setup is a setup doesn't necessarily mean it's always going to work. This was a nice little chart pattern, kind of a scoop pattern, double bottom. Had it opened positive the next day, I would have been a buyer, breaking through this level and confirming the scoop pattern. But let's say hypothetically you had bought this one, and then it closed back down below the halfway point of the candle that told us to be in it. You close it right back out, or as soon as possible. Even though you might have a small loss, it's better to take a small loss than take a bigger loss, and that's not the whole reason. What happens when you hold on to a position too long? Now you're calculating, oh man, I've held it on way too long. If I sell out here, am I selling out at the bottom and it's going to start back up? So you're holding on to a position that's going in the wrong direction and not doing the right thing just because you didn't sell out at the right time. So let me see if I've got something else that would be more clarifying. Here's a case where it had a hammer, bullish engulfing, came up, and then closed back down here. So if I've got 8 or 10 positions on, and this is one of them, and it closes down here, I want to close it out quickly because it's not doing what I wanted it to do. I want to get out of this position because it's not doing what I expected it to do, a little scoop pattern off the 50 that failed in its big move. I want to be out of it and move on to something that has much higher probabilities of doing this type of thing. So if I keep doing that and I keep closing out the bad trades on small losses, even though they may turn around and head back up, I've got too many other charts. If I had been trading this one, definitely would have closed out here and probably would have closed out right in here, because what did we need for it to do to tell us they're going to be breaking out? They should be opening positive after that doji day. Lower open. And so even if I say, oh man, maybe it's the stochastics are coming up and I keep seeing it trading lower and lower, I finally get the idea. They aren't going up this way. Close it out. So anyways, this is what I was trying to allude to, was that if I have 10 positions on and I've got something that looks like this, it doesn't look great, I want to close it out because I may have a few that are looking like this. So this all becomes a very little insignificant factor of closing out a bad trade and going and find another one like this. So do I ever have 10 good positions going on at any one time? Occasionally, but most of the time I might have 6, 7, 8, 9 trades all acting like this and one acting like this. close this out and move it to another one where hopefully some days I have 10 positions all moving in the same direction or in the right direction. So if I've got something like this that was looking good, had a J-hook pattern, and now has come back and closed right on the T-line, and I'm kind of speak for myself because it used to be my emotional factor was, man, I want this one to work too. If it opens lower, what else can I analyze that tells me that I might want to hang on to it? Well, it might be still a trend channel. Because we've got so many opportunities now based upon chart patterns. If I own this one and it opened lower, the first thing I'm going to do is say, is this the best place to be in right now, or is there a chart out there someplace that looks like this, where my probabilities are much stronger versus this? Well, I'll close out. My basic logic is, if in doubt, get out, because there's something that has out there that looks more like this, where the doubt there isn't any doubt. Okay, let's take a look at a few longs here. This one looks good because of one primary factor. Let me see if I can do this. That's what we've got going on here. Pretty much kind of a wedge. And where's the wedge right now? Right here at the resistance level. Telling me that if they break this out higher, that this whole wedge formation is now broken out. We're now into the next wave. A lot more upside potential. So when I'm watching for where to put my money as far as positioning, I want the things that have probabilities going with them. PACB, we closed out about a week ago because it was closing back below the T-line. Did we think it was going to come back up? Yeah, we thought so, but we weren't sure. For all we knew, it could be moving sideways until the 50 caught up. Now it's showing us there's a little bit of strength, and this is starting to come back up. So I would rather close out in here and buy back in here knowing that the pattern is working. That keeps me from holding on to something that may be heading in that direction. RLYP is another one that's in that category where we came up here and it's possibly doing a bobble. Say possibly. Kind of did a doji hammer right here on the T-line today, which makes this very simple. To hold on to this one any longer, it has to open positive and start trading positive tomorrow. If it opens lower, pretty much telling us they failed at the 200 and they're pulling back either to here or here. So we'll close it out. TSL is one of the solars with a kicker type signal. Got up here to the 200. Makes this also a very simple analysis. If they get through the 200 and keep running, breaking this level, there's a wee little teeny gap up here. So does this wee little teeny gap mean anything? What it really helps you decide is, if this does break out, you at least know the momentum is heading for a target that is in this direction. Gives us one more, TC is to go private, offer effect. All right. So that, what was the other one that went private? The GMCR? Yeah, going private. So all depends now where they think the fair price is going to be going private. So at least you know if it trades positive tomorrow, they're still taking it up in that direction. Let's see. Now, back to TERP. I have to really push myself on some of these because I guess this is a utility. I was a stockbroker in the days where utilities didn't move. They just paid dividends. But utilities now move just like a high-tech stock. So with this one acting well, Crestwood Equity Partners, I think, also is in the power area. Also doing a little bullish move, which could take you back up to this area. This would be a significant move. That'd be almost a 40%, 45% upside to get back to the resistance levels. And that's the power, the CSIQ. The solars all are acting well. Here's CSIQ, another J-hook pattern in progress. If it opens positive, breaking out through this level, where's your next target? Up here. That's a 10% move. Is that worthwhile? Yeah, 10% is worthwhile. Number one, and number two, is it going to quit here? We have no idea, but at least that becomes a viable target, because if this is wave one, wave three should take us up into that area. Soda, I haven't paid too much attention to in a while, but it did the the message with a gap up, the consolidation, and notice what's happened on the consolidation. They can't get it back below the T-line. So that makes this your viable target, which means at least you're in a profitable situation, even though it's not very big, and then makes this your likely target. But this is kind of your message right here. They've started this back up with great enthusiasm. KMB, we can see wave one, we can see wave two, and how did wave three have a potential of starting? Once again, with your best friend, kind of an island reversal, banded baby. And where did it close today? Right here at the resistance level. If it opens positive, what's it telling us? It's telling us it's confirming the best friend signal and telling us that this is not acting as a resistance level. Now there's your upside potential, which came from 104 to 122. Another 18 points to the upside should take you up into the 140 range. Uh-oh. This one doesn't come up over here. I don't know why. That's, oops, and that one's not working. Wave one, wave two, morning star signal. Another one that if it opens positive. This ran from 31 to 42, 11 points from here would take you up toward the $50 range. So again, the reason we want to go with the patterns is because that's what we recognize as being high probability setups. And that even if the market is not in an upward, downward, or sideways direction, or even if it is, there's still going to be chart patterns that work very successfully. There's a big bullish engulfing belt hold type signal, an ACIW. Makes this very simple. It starts trading back up above the T-line, you can be buying. Now on the other side, on the short side, whenever we can see that there's been a break of the trend and we can recognize what signal or pattern got us through that break level, doji, bearish confirmation, closing below the T-line, then what followed after that? Our doji sandwich. And what do we know about doji sandwich? There's usually going to be more downside after that. And how strong was the downside? They did support at the 50. So that makes this area our next target. So if you started shorting from up here, all you have to do is stay short until you see a buy signal. So we're looking for the ones where the patterns are starting to tell us something. And that's why we went short on Western Digital today when it was trading down here. Because notice what happened here. A doji type day right on the T line with a gap down on Friday. They opened it positive, but it immediately started selling it off again, telling us this slow curve type pattern was setting up. And then by the end of the day, where did it close? Back below this support level, kind of giving us an indication that either this is our target, which would bring us down to the 50 area, or if this is wave one, this is wave two, another 20 points to the downside would take us down into the $40 range. And is this a good signal or time to be shorting? Look at these stochastics. They're midway and they're turning back down, pretty much telling us there is no buying going on. There's probably still strong selling. And why do we consider this still strong selling? Because ever since our bearish left-right combo gap down, we really haven't been able to get it back up above the T-line. Oh, let's see. SWKS, yes. There's your bearish doji sandwich with gaps in it. I would stay short with the prospect with your stochastic still heading down. But your first target is probably down in this area. We were short call, and it started basing in here today and then gave up again. So we want to stay short on this one. And Men's Warehouse, we didn't get into that first gap down day because that was kind of our slow curve breakdown. We had recommended it after this close, but then a gap down. But then notice what's happened. That was the initial bounce, and they're still taking this down. And how are they taking down? With a big gap down. I would look for this trajectory to take us down into probably the $9.50 area. Now, do they always get there? You got to find something that tells us everybody's watching or what everybody else is watching. And once it does get there, if it gets there, the advantage we have is we can see exactly what's going on in investor sentiment when it gets to specific technical levels. SUM, there's kind of your double doji. There's your doji. There's your double doji sandwich. And where is this trading right now? Just above the support level. So if they trade this one lower, there could still be a lot of downside. And it's basically because of the sell signals. Bearish engulfing, bearish engulfing, bearish doji sandwich. Now we have a double doji to the downside. Even though we're in the oversold area, we definitely want to watch to see if that's see if there's the continued weakness in this one. AMAG, another slow curve, breaking down. But if this traded lower, doing a bearish doji sandwich, probably breaking this level, and notice what type of pattern we have. Kind of a bearish scoop pattern. Notice the slingshot effect could still be pretty strong to the downside. Somebody was pointing out AAN today. Same scenario, slow curve, double doji sandwich. They just can't get this back up above the T-line. They can't even get above the 3T line, which tells me there's still a lot of strength to the downside. We've been short CAR because ever since it failed, there's your wave one, there's your wave two, there's your wave three. Covered our position here because wave one or wave three and wave one were about the same. But now look what's happened. Kind of a bearish flutter kicker. We re-shorted because now this becomes wave one, wave two, wave three, same magnitude as this one. Let's see, I've got BABA on here. Because BABA could go either way. Trying to show support at the 200, but you had a kicker type signal to get down there. The stochastic's still heading down. So this will also be important to see how they open this one tomorrow. They open it lower, got a potential bearish doji sandwich that would take you through both the 200 and the 50, probably making this your next viable target. And that is somewhat the same as Costco, that you had a strong kicker signal, but even though they traded down, you can see that every time they open it, they're trading higher. So that visual gives you more of a exact impression of what's happening in investor sentiment, that every time they try to sell it off, they're taking it right back up again. We're short ADPT because of the slow curve. Where's the likely target? First target right here. Next target is this downward trend channel down in this area, making for a significant move. Wouldn't you say that you have to watch the bullish Harami on BABA? Yes, but where is a bullish Harami most critical? When your stochastics are down here, not still in this direction. So that's why it could go either way at this point, because you're not in an oversold condition. So you have to see how they open this one. Yahoo, I'd be more apt to go short, even though I don't like the trend, which is basically sideways. But notice what you were seeing: a bearish engulfing signal, a dark cloud, a bearish doji sandwich, and now you're back below the T-line stochastics heading down. Now you've got that impression of a little bearish scoop pattern, which also could give you a slingshot to the downside. Oh, pshaw. CPHD. So when you do have a day like this, not quite a bullish Harami, just an up day and a downtrend, but your stochastics are in the oversold area, so you don't have a reversal signal. But this also tells us if they open this positive, at least they're probably going to bounce back up to the T-line. Are they going to fail there? Have no idea. So if I was short this one and it opened positive tomorrow, I'd probably close out the position, because I'd rather be wrong as far as trying to keep my profits versus giving up profits. That's not the right word. I would rather be wrong and protect my profits than not be and not protect my profits and have the profits eaten up, because then you have to make them back. Whoops. An end tap. Anytime I see that bearish doji sandwich, especially when they gap down through a resistance level, there's kind of your wave 3 in progress, you just stay short. Yes. I don't know what the volume is on this one, but that's also a good looking short. So anyways, right now with the markets the way they are, we don't know whether they're going to bounce this and support, or whether they're going to, we wake up tomorrow and the pre-market futures are down 80, telling us they're still heading down, telling us this support level is not acting as support. They're coming back to another target, either this level or maybe coming down to fill this gap. So that's about all I got tonight. Oh, I guess I skipped the biggies. Amazon had a big up day. There we go. But not a reversal day. As we can see, this is not a reversal signal, not a bullish engulfing, not a bullish Harami. which tells me more than likely when they get up to one of the resistance levels, you might see it start selling back off. Now, does it mean it will? Not necessarily, but because there wasn't a reversal signal, I give it less credibility of being a strong reversal to the upside. And WABA is right there on the cusp. That if it opened lower tomorrow and you were long, you want to close it out. The only way to stay in it is it has to open positive and trade positive. Apple, we don't know. It's did a nice gap down hammer doji type signal at the same level it bottomed out before. Got to see how they open this one tomorrow. I would rather give up a little potential profit instead of losing a large amount. Okay. Yes. So, yeah, the reason for that attitude, obviously, is that if I've got something where I don't know whether it's going to which way it's going to go, I'd rather close it out because I've got probably another 5 or 6 charts somewhere that I could go to where I have a much stronger probability. So instead of holding on to something that may go up, may go down, and may go sideways, at that point it now becomes a chart that I wouldn't be trading, so close it out and move on to something else. Now I do that to try to eliminate my emotions being involved with what to do with that trade. Because what's our biggest fear of closing out a position that doesn't look good? That it turns right around and heads back up without you. And that was always my fear of closing out something too soon. Because what if it turned right around and headed straight on up? Boy, would I look stupid. But I would still guess that for every time I closed out something that moved in my favor again, I probably have 3 or 4 times where it moved against me and I was glad to be out of that position. Or moved sideways, and I had moved my money to some place where the probabilities are much greater in my favor. When, another one that's tough to trade because it's in this sideways channel. And I think we just did Apple. Okay, we did Apple. So, all right, so with that, are there any general questions on candlesticks? And if not, Jim, go ahead and do the double line. And in 3.8 seconds, do the next double line. Whoops, I scrolled right past. Oh, Scott, yes, I would do. I think we did this one earlier, or I meant to do this one earlier. We have kind of a hammer signal down here. So that gives us the same. So this is going to be one of the ones I would have illustrated to say, if it opens positive, and I'm short, I'm going to close it. Because we're in the oversold area, we have a hammer. So if it opens positive, where's our next likely target? Back up here to the moving averages. If it opens lower, I know that my downtrend is still in progress. So am I going to be right on this? I just know the probabilities are if they open this positive, that more than likely they're going to start trading it up. And I take that money and move to a chart that has much more compelling factors to it. SWKS, you stay short. If you're looking at Dow Chemical, right now I'd be ready to go short on Dow if it opens below today's, or trades below today's low, which takes you down through the 50 on kind of a trend kicker signal to the downside. Not a very prolific one to trade, if that's the one you were asking about, Sam. And CVX Chevron, another one that is a toughie to trade right now. just because there's a slow trend channel, no great buying conviction, no great selling conviction at this point. I'd be trading someplace else. And Yelp, you can see the slow curve. This one's also pretty simple. You shouldn't be in it right now, but if you were going to go short, it'd be on a weaker open tomorrow, setting up for your bearish doji sandwich. And KERX, you stay short if you can be, well, if you shorted it above 5. If you're short on this one, you just stay short. And VXX, you stay long, but if this one traded lower tomorrow, figure it's going to come back and test the 200 and see if it holds up at that level. The VXY, not coming up over here for some reason. Fold. I saw David L. went short on this one earlier today. Just have to be careful. If this starts holding up at the 50, because you're getting in toward the oversold area, I'd close it out and move to something else. So we did AVXL. I'd still be a buyer of this on positive trading tomorrow. Let's see, ALPM. I am not, that one's not coming up. The bonds, the 10-year notes, 20-year notes. You can see it's in a slow uptrend. It had a kicker type signal today, but still in a slow uptrend. This one would be tough to trade, but if you're holding bonds right now, you just stay long on the bonds as long as the uptrend stays in progress. And ACAD, nothing here yet. You have a bullish Harami in the oversold area. If I was short, I might cover it on a positive open tomorrow and see what it, see if it comes up to the T line. If it opened positive and I closed it, I'd reshort it if it came back down through the halfway point of this candle. Gold Trust, getting a little bit soggy. Looks like it's starting to head back down into a bearish J-hook. Facebook, I wouldn't be trading this. It didn't do a reversal signal at the 50. It showed support here, but because it isn't a reversal signal, I wouldn't be too anxious to jump in. And if I was going to jump in, it'd have to have enough strength to get up above this downtrending channel at the top of the channel before buying it back. We're watching PACB. Got kind of a little J-hook pattern setting up. EXLS, there's your belt hold right off the 50. This one is a good chart to be buying on positive trading. And First Solar, another one you can be buying on positive trading. Just make sure it gets up through this resistance level pretty quick. You can see the shooting stars occur once it got up there. And Disney, a bullish Harami right here at the 200. If you're short, I would use today's high as my stop. If it comes back up through there, that's telling you the 200 is having an effect, and more than likely they're going to take it back up to the T-line. Netflix also, if it opened positive tomorrow, I'd probably cover any short positions and just see what it does once it gets to the T-line. Medtronics, that's a very dodgy sideways moving chart. I wouldn't be long right now, and I wouldn't get long until you see it close above the T line. Hawaiian Air needed to get back up above the T-line. It just hasn't yet. Now, if I was going to buy Hawaiian Air, I'd use today's high as my stop. I'd rather buy it at 38.35, knowing that it's coming back up in that direction. Kroger, just stay long. J-hook pattern. ALNY, stay short. Ever since you're hanging man right at the resistance level, you stay short until you see a buy signal. And ACXM, you stay short. You've got potential inverted hammer, but your stochastics aren't anywhere near the oversold area. I would stay short just for a safety factor. If I was short, I'd put a stop at today's high. It shouldn't come back up through that level. Tesla also stays short, but if it opens positive, I'd probably be covering the position and then reshort it if it came back down through today's open. Google L, that's a booster reversal. There's your inverted hammer with bullish confirmation. And that bullish confirmation was they took it all the way down to the 50 and then did a booster confirmation. You could be buying this one on positive trading tomorrow back up above the T-line. And FPRX, all you can do here is stay long as it doesn't close below the T-line. Derm, you can be buying this one. That's a good-looking chart. Regal, notice once it gapped up, it's gotten very indecisive. Boy. If it traded sideways tomorrow, I'd close out the position and just wait for the next buy signal. Now, we've had a kind of a flutter kicker signal, but it might lollygag here for another. There's no strength shown. I would rather put a buy stop at, say, up at this area, just above the 20. But if it came up through there, that told me they are taking it up. And Johnson & Johnson, that's one of your epitomes of institutional traders, and it's a slow-moving stock, and it's moving sideways. Probably wouldn't be trading this one. Lumber Liquidators is up after hours. All right, just watch to see where it is compared to this downtrending channel. I guess we can make this more pronounced. If it gaps up, through the 50, I'd be a buyer. Up 3, so that's up to 17. All right, that's a big gap up. Milam, just stay long, a nice little J-hook pattern. And ALTA, another one that you stay long as they can't close this below the T-line. ANET, another one that's an up day during a downtrend. I'd be more skeptical. I wouldn't want to see this close above the T-line. If you're short, you stay short. Just don't let it close above the T-line. An STRP, another one where you just stay long as it doesn't close below the T-line. Baby, needed to get back up above the T-line. If it opens positive, you can see what the trend channel is. You can see where your target is, somewhere up in that range. Self-storage, nothing real exciting here until they get up above the 102 level. If you're long, you can stay long but I suspect this is more of a long-term hold because it's not a very exciting mover. OCLR, nothing here. You shouldn't be in this one with it trading below the T line. Wouldn't be buying it until it gets back up above the T line on a buy signal. Walmart, this one you can get ready to buy if you like Walmart. It's not a very big percent mover either, but you can see what's happened here. They've hit the resistance at the 50. Now you've got a buy signal and a close above the 50. You can be buying this one on the basis they could eventually bring it back up to test this level. And I say eventually, not a very active mover. RTN, another one where you just stay long as it stays above the T line. KMI, I'd be ready to short this one on further weakness because you're bearish J-hook pattern after your slow curve breakdown. And U.S. Steel, same scenario. If this one opened lower, you can see obviously they couldn't get back up above the resistance levels. You're still in a downtrend. Oh, usually, Frank, within 3.8 seconds, everybody's typed in most of the symbols that everybody wants to see. Yeah, 3.0 are both Fibonacci numbers. So right now we're staying long on Scotty because we figure it's going to be up here, and we're long the December spreads, which expire at the end of this week, and we were long the 36.50s, and we sold the 40s, a 3.5 dollar spread, and we bought the spread for $1.35 with the anticipation of it going to 3.50. So as long as it stays above 40 over the next few days, then that spread should go to the 3.50 level. Where can I find a replay of this recording? How? Jim will answer that for you, Justin. Are there 3 favorite reversal signals of you? No, I like the slow curves because they usually create very strong pops. I like the best friend. That's usually going to provide a very consistent trend, and the left-right combo confirmed. I mean, and it's also a function of what the market conditions are. And I definitely like the fry pan bottom breakouts. JBL, if you're short, you stay short, but if it opened positive tomorrow, I'd probably cover my short position. I wouldn't buy it necessarily until it got up above the T-line. Oh, on Scotty, a couple of days ago, I think it was either Thursday or Friday, because of the bobble pattern, which was coming up, hitting a resistance level, pulling back, but not trading below the T-line or closing below the T-line, we knew we had a bobble in place, which meant if they broke out through the 50 a second time, it was going much higher because that now sets up a J-hook pattern, which wave 3 or wave 1 and wave 3 are going to be approximately the same. So because we only had about 5 trading days left when the stock was right here, we were buying the 36.50s in December and selling the 40s. Frank, yes, thank you very much. Yes, Sandy pulled it out and said, why are you getting this? And I said, because people think I need a diet. So anyways, thank you for that book. So anyways, that's what we were buying. 36.50s, selling the 40s, and the net was $1.35. But if it closes anywhere above 40 over the next going into expiration this Friday, that means the 36 or the 36.50s are going to be $3.50 higher than the 40s, or we're going to net $3.50 out of it. Loco, yes. Now you can hang on to it, or if you did hang on to it, your J-hook pattern has failed, but your trend is still in progress, provided it opens positive. If it opens lower tomorrow, I'd close it out because that tells me nothing's really happening. Okay, I guess that's about it for tonight. So everybody can go watch. Oh, is there Monday Night Football? I forgot about that. And you can watch your favorite Christmas movies. I watched It's a Wonderful Life last night, and it makes me cry every time. It's so good. It was fun. All right, everybody have a good evening. We'll see you bright and early in the chat rooms.